Okay, imagine this. You and your best friend decide to host the biggest barbecue ever. You need grills, you need food, you need space, and you especially need coolers that work so the drinks don't spoil. Now imagine your friend says, "Hey, I'll invest in that cooler business, and also build you a huge walk-in freezer as you scale up." Suddenly, your backyard BBQ turns into a festival site. That's kind of what's happening with NVIDIA and OpenAI. Except instead of burgers and coolers, it's advanced chips, data centers, and AI sweat. NVIDIA is agreeing to invest up to $100 billion in OpenAI, not just so OpenAI can buy chips, but so it can build out the infrastructure, the freezer equipment, to scale its AI work. Let's break that down. Here are the key parts. 1. The deal. NVIDIA will invest up to $100 billion in OpenAI, but it's not a single check. It's phased in, tied to infrastructure deployment. For example, the first gigawatt of compute using NVIDIA systems is scheduled for deployment in the second half of 2026. 2. What OpenAI gets: access to NVIDIA's chips and systems to build data centers, plus cash investment to pay for parts of that infrastructure. This lets OpenAI scale, build more capacity, train more powerful AI models. 3. What NVIDIA gets: NVIDIA gets non-controlling equity in OpenAI, meaning they own a share, but they don't control OpenAI. They also become a preferred infrastructure partner, and by tying their payout and investment to actual deployment of compute, gigawatts built, they share the risk. 4. Why the scale matters. 10 gigawatts of compute means a massive amount of power, as much infrastructure as power, cooling, real estate, maintenance, etc. It's not just buying better chips, it's building factories for AI thinking. Let's say you run a bakery. You can bake 100 loaves a day with your current ovens, but you want to supply entire neighborhoods or cities. You need new ovens, you need bigger freezers, more staff, more delivery trucks, plus someone to invest in all that, so you don't collapse under the costs. OpenAI wants to serve much larger demand, train much bigger models, maybe even push toward artificial general intelligence. They need big ovens, compute hardware, massive freezers, data centers and cooling, trucks, power infrastructure, networks, and money to build, operate all of that. NVIDIA is saying, "We'll be your partner, we'll supply ovens and help fund the build-out, and we'll get a slice of the bakery profits." A company many know, think of Amazon expanding its fulfillment centers. In finance, we talk about capital expenditure, fixed assets, operating leverage. Once you build big fulfillment centers, future orders cost less to fulfill. Similarly, once OpenAI has built big compute capacity, each new model or bigger version is cheaper, relatively, to run. Here's something less discussed: the risk of stranded cost and depreciation mismatch. Investing in data centers and compute hardware is expensive up front. These assets lose value over time. Chips get outdated, cooling infrastructure ages, power costs may rise. If OpenAI builds too much capacity too fast, but demand or efficiency or power availability, cost, doesn't keep up, some of that investment may be underutilized. That means depreciation kicks in while revenue lags. Also, NVIDIA's non-controlling equity means they're exposed to OpenAI's success, but also to its risks: execution, regulatory, power supply, energy costs. So there's a balancing act: scaling fast enough to justify the investment, but not so fast that you overbuild or lock in costs that can't be recovered. So to finish, NVIDIA is committing up to $100 billion phased over time in a deal with OpenAI to build up massive AI compute infrastructure, hardware plus data centers. OpenAI gains both access to cutting-edge chips and the capital to build out the factories, data centers it really needs. NVIDIA gains a strong partner, equity, and makes sure its chips are central to AI's future. But there's risk: large upfront costs, assets that depreciate, and the danger of overshooting, building more than what can be used or paid for. To build the future of AI, you need both the fuel, money, and the engines, hardware plus infrastructure. This deal is NVIDIA supplying both, betting that the engine will run for years to come and the fuel won't run dry. And if you want more finance explained without the boring jargon, hit like, hit subscribe, and we'll keep breaking down billion-euro moves into plain English.